Hey, in this video, I'm going to review Chewy. We're going to do a 4M analysis. So we'll use Tykr for the first M, that margin of safety, and then we'll talk about the meaning, moat, and management. Let's dive in. So when you log in at Tykr and look up Chewy, you can see the score is an 84 out of 100, which is outstanding, really strong financials. And then the margin of safety is a 90%. We can see the share price is 32 and the fair value is 163. So a lot of upside potential there. We won't spend too much time on the math or the numbers because Tykr does that heavy lifting for us. But let's just take a quick look. Sometimes I'll do this. I'll go to the financials tab. And I'll look at the year over year and then quarter over quarter to see how things are looking. So if you just go to revenue here, this is impressive. It's just year over year improvement. We'll break that down a little bit based on the history. So revenue looks outstanding. Net income is still negative, but you can see here that the numbers are moving in the right direction. So for example, it was like 2 years ago, negative 252 million net profit. Negative 92, and then now it's negative 73. So again, moving in the right direction. Earnings per share, which is very similar to your net income. Net income or EPS or earnings per share is your net income divided by outstanding shares. So here, very similar story. That EPS is moving in the right direction. We go from a negative 63 cents, negative 23 to negative 18. So moving in the right direction. Cash flow, if we go over there, we can see they're now positive, just over 8 million, which is good. And then we jump to the balance sheets, and I'm just going to look at assets here. I can do a quick summary of everything else, but the assets are increasing nicely year over year, which is fantastic. But what I'd like to do is I want to spend a little more time on the meaning and the moat. We'll also talk about management, but the meaning was really interesting in this business. Now, when I do a stock review, I'd like to really dive in. I do take a few hours to dive into a stock, understand where it's been. I love learning about the history of businesses. It gives me context on where a business has been and where it's going. So this was really fascinating. I did not know this. They were founded in 2011. 2012, revenues already hit 26 million. 2014, revenues hit 205 million. 2015, they already hit 423 million. So really fast growth. What they did there is they had a few people come over from Amazon, PetSmart, Whole Foods, Wayfair. So a lot of strong e-commerce leadership in this business to really help grow the company. Really impressive. 2017, just 6 years after the company was founded, their revenues grew to $2 billion. It captured 51% of the US market of online food sales, which I thought was impressive. They really started making a lot of noise. And then Petco and PetSmart approached Chewy to buy the company outright. At the time, they're actually looking to go public. So what happened is Petco offered partial stock as well as partial cash to buy out the company. PetSmart came in with a better offer. They said, hey, we'll do all cash and you can keep your brand. You can keep the Chewy brand. So they went with that, which is awesome. Fast forward a few years, that was 2017. We get to 2019, Chewy went public. And then soon after, private equity company BC Partners, what they did is they actually separated Chewy from PetSmart in this case. So they are now their own business, which is great. So the growth was just incredible. I know there's a lot of people who talk about Chewy. Motley Fool, for example, there's a few people on the show that do really love this business. They've certainly made a lot of noise in the last few years. But let's continue on. So how does Chewy make money? They're a pretty easy business to understand. We'll break it down a little bit. So they're an e-commerce business. They have a little over 2,000 brands, 55,000 SKUs or individual products on the site. About 70% of their revenue is from consumable products. So like dog food, cat food, treats, so on and so forth. About 30% is from hard goods. So that'd be toys or like beds and so on and so forth. What really is impressive about this business, and this is good to know for anybody out there who's creating or growing an e-commerce company on your own, is they added auto ship. So what auto ship does is it kind of transitions an e-commerce business into a SaaS business. This is possible when you have an e-commerce business. Selling like a consumable product, like food, for example, is great. In this case, pet food. So what I did, I've been a customer of Chewy for years, is I can, as a consumer, set up auto ship. So a bag of dog food can be sent to my front door every month. When I set that up, it's 35% discount the first month and then 5% discount thereafter. And what that does is it creates that steady stream of revenue for Chewy, and I get a discount at the same time. That's actually 60% of e-commerce revenue is from auto ship being set up. So really smart play there by Chewy. And then they also added Care Plus. It's their health or pet health insurance. I love insurance, great business model. There's no product, there's no supply chain. You're not selling something physical against it. It's reoccurring. We learned through the years, Warren Buffett bought Geico. It was one of his best, if not his best investment ever. He's made a lot of money through that investment. So insurance is really a smart play, a nice little bolt on to the business. We're going to talk about the moats in a little bit. So I did a little homework on really what sets Chewy apart. And I have to say their customer service. This doesn't happen all the time, but there's an article I found on fortune.com that states that at times, unfortunately, for us pet lovers out there, our pets don't live as long as us. Cats and dogs maybe live between 10 and 20 years at most. And it's sad to say goodbye. And in this case, Chewy has sent personal letters, cards, flowers to people who have lost their pets. I thought that's super smart play. You make Chewy memorable, and you'll probably remember those moments for the rest of your life. You're probably creating customers for life. So I really believe, Chewy, you need to lean into that. That's a really smart play. I want to just skim through the news a little bit. I like to see what's the latest news on a business. Just a few highlights. There's a really well-written article here from Seeking Alpha. You could go to this site, click on the link. I thought it was outstanding. I'm just going to summarize some of the highlights. So I thought this was a really cool idea. They have goodie boxes, which are competitive to BarkBox. Essentially, it's another reoccurring revenue product where you can have treats and toys sent to your door for let's say your dog every month. Really smart play there. Of course, they did emphasize Care Plus insurance was a really smart play. And this was interesting too. They've given back or donated $100 million to 9,000 animal-related nonprofit organizations. Really smart play. A way to use the business, the power of the business to give back to the community. That was smart. They did, however, there's two cons here, which I totally agree with. One is there are a lot of competitors. There's a lot of e-commerce companies out there that serve the pet market. And then they did state that given the economy, us as investors, we should pay attention to supply chains. So if there's companies out there that are, supplying product for Chewy, whether it's consumable goods like pet food or toys, there might be impacts there. So just keep that in mind. To call out some of the competition, of course, you have Petco. There's a lot of private businesses in this space. PetSmart, BarkBox, I mentioned earlier, PetLove, PetFlow, Phytotech. There's a long list, most of which I've never heard of, but they're popping up. It's not a hard business to start. People can find products overseas. They can spin up a shopping cart on Shopify, let's say, and you're off and running. Now, the big threat to pay attention to is actually Amazon. So I did a little test. I picked a product on Chewy, just a bag of dog food, and I went to that exact same product on Amazon. The same price on Chewy as on Amazon and the same discount for auto ship. So what Amazon has done is they've mimicked the same model. So in this case, Chewy can't create a moat with auto ship or the prices. There's no moat there. Amazon's a strong powerhouse. They haven't the infrastructure to do this. So that's a big threat. Keep that in mind. If you're interested or you're an investor in Chewy, the products are going to be pretty close, if not dead on the same price. This goes back to how do you create a moat? In this case, it's that customer service. And it's not the most glamorous process because you can't automate it. You have to have good people in the business that really believe in your brand, but they need to lean into that great customer service. I say on the front end, when people are buying products, I think they can do a better job there. And then I really like to play that sympathy, that empathy when you lose a pet. Follow up with people, be there for them, because that's going to encourage them to keep coming back. What I want to do a little bit here is talk about management, and then we're going to do a quick overview of the 4Ms. So the current CEO, Sumit Singh, has been the CEO since 2018. His previous experience includes leadership roles for about it looks like about 5 years at Amazon. He also worked at Dell. So he has really good experience with e-commerce, working in executive roles, helping grow global brands. I think that's great. He understands supply chain, how to market, how to sell, how to really expand a business like this. That's good. The issue is, and this is something we're doing more of with Tykr, is lean into Glassdoor. Glassdoor is a great platform because you can really understand the truth behind the scenes. What are people saying? And their Glassdoor rating is not impressive. It's a 3.4 out of 5. We like to see a 4.0 or higher. And then the CEO rating is actually a 68%. We like to see 80% or higher. I did skim through some of the Glassdoor ratings. I like to see what people are actually saying. And in most cases, you're going to, when you see lower ratings, you're going to see a lot of issues with middle management. So there's micromanagement. There's people being pushed to work longer hours, maybe not the best pay, a lot of condescension, people being talked down to. That's a big problem, because if you want to create that customer service that really believes in the brand and sharing the product and sharing their vision, giving back to nonprofits, if you really want to carry that through, it falls on customer service. And if I were leadership, I would place you've got your e-commerce systems in place, you've got great products, you've got great prices, you got pet insurance taken off, you got a lot of stuff working well. I would place my emphasis heavily on customer service. How do we get people to stay with the company? Because if you have lower Glassdoor ratings, tell you what, you're going to have high turnover, and bringing people in quickly means you're most likely running into a situation where people are just looking for a job. They want a paycheck. They want to punch in, get paid, punch out. They don't really care about the customer. That's not what you want. You want people that really believe in the Chewy brand, and they're going over and above to do little things. If you can get an army of people doing little things for the customer, that's what creates that stickiness and create that moat with the business. So that's at least what I would do with Chewy. So in this case, if you summarize the 4Ms, margin of safety and meaning, looking really good. The issue is the moat, that competition. Amazon is the big threat there. And then management, I think Singh can do a great job. Again, optimizing the business to run very well, but let's place a little higher emphasis on customer service. Now, in summary, what would I do in this bear market? There's a lot of people talking about the brand. Chewy is a good brand. They give back to nonprofits. Is this a long-term hold? I would question that right now, although the share price is down like over 70%. When the market starts taking off, and we did take a look at the revenue and the net income and EPS moving in the right direction consistently, this stock will most likely generate returns when the market takes off. So I can't guarantee 100%, but you'll probably make some money. But if you do own the stock, or you do want to get in, I would watch it closely. Like if something changes within Tykr, like it changes from over on sale to like watch or overpriced, that might be a good time to sell. If you also see a threat here with Amazon and their revenues start to slow down, that might be another time to, hey, I've made my profits, time to sell, move into another stock. So just food for thought. Again, you'd probably make some money in the short term, but keep a close eye on this one for the long term, unless they can totally transform that customer service department. So overall, this is a stock that, I'm going to add to my watch list. I just want to keep an eye on it, but I'm not going to invest in it. But if you do like the pet industry, you like Chewy, you like the brand, you like what they're doing, this might be a stock to consider. Hope you like the review. And if there's a stock you want me to take a look at, please leave a comment below. I'll get to work. We'll talk soon. See ya.